All right, welcome back, Gareth Soloway. We're going to continue our tradition of getting together whenever the market has some crazy moves going on. What's happening?
Hey, not too much aside from some fun in crypto land all of a sudden.
Yeah, Bitcoin decided to wake up and join the party. It's been laying kind of dormant while the market's been seeing some nice rallies. So, what are you looking at? What are you seeing out there?
Yeah, so I mean, we've definitely had an impressive move on Bitcoin, right? So I mean, Bitcoin has finally woken up. I think that you see a lot of this hype building very, very quickly, which for me is a little bit of a concern, right? I've been through many bear markets in my 25 plus years of trading, and it's very rare that a bear market ends with euphoria coming in so quickly. Usually the first 10, 20, 30% after a bear market, investors are very, very skeptical. And that's not what I'm seeing this time. And that makes me a little nervous, to be honest. It does. I think that people were just kind of biding their time and they're just jumping back on the bandwagon. I'm seeing incredible pumping across all social media platforms.
Well, Bitcoin's been basically flatlining for the last several months. So, it's understandable. Everybody's getting
Yeah.
excited. The thing that's interesting is nothing has changed from the Fed standpoint.
Right.
Nothing's really changed in inflation. It's still over 6%. Nothing has changed from, tightening of financial conditions and recessionary expectations. In fact, I think that is potentially getting a little worse. And we're going to find out with the earnings and, forecasts and things like that coming up here in the next couple of weeks.
Yeah, I mean that's kind of where I'm at too, is that there hasn't been any change. You could argue that the Fed is coming to the end of their hiking cycle, but that doesn't mean interest rates are going to go back down, right? I mean, we figure the Fed funds policy, level is going to remain at 5-ish% for most of 2023. So you don't have that dropping of rates that can stimulate kind of the Bitcoin surge again, like past bear markets ending, nor do you have quantitative easing going on, both of which are unlikely to come in this year. So for me, this is very classic of a bear market rally. And that's why I'm a little skeptical. I had some longs going into this. I was talking about a potential breakout. We've gotten that, but I always said it would be a breakout that would get bulls to kind of jump back on the ship, but it probably is a shorter lived bull market run, intra bear market, right? So let me show my charts here because I think there's some cool things to look at. So number one, if we see this chart here, right, this is the bull run that we've just experienced. Incredible, right? I mean, we haven't experienced this in quite some time, but number one, I mean, it looks big, but if we zoom out on the chart, I think it's important to keep it in perspective, right? This is what we're talking about. This is what's getting all the hype, is this move up in Bitcoin. And again, like you said, very normal because people had been kind of lulled to sleep with no volatility. I think we had the lowest volatility in Bitcoin history. So it was kind of dictating something would wake things up. But again, you have to look at, okay, this is the down market and this is where we are right now. Is it anything yet to get excited about? And I'm going to tell you where I'm going to get a little bit excited. If we were to take out this high right here, which is the beginning of the FTX collapse, where we saw FTX, and all the fraud and all that come to light, that's where if we could get above that psychologically, I think that would be a positive for Bitcoin. But
Now,
notice where
when you say
Bitcoin
get
stalled
above it,
out.
you mean break above and start using that level as support, not just break above and then return.
100%, right? So that's so important because people will see an intraday move above or even a close above, get very excited, and then they'll wonder why price gets slammed back down. So you want to see price get above and actually stay there and consolidate there, right? And again, if you look at where Bitcoin has stalled here, it's right at that level. Now, let's talk psychology of the markets, because this will be a great educational part, is that why do these levels have so much resistance? And the answer is this. Over here, you had choppy sideways to up move. You started to make moves to the upside right here, right here. A lot of people were buying Bitcoin. And then all of a sudden, that floor got just pulled out from under them. And they saw their accounts drop by 25, 35, 45%. In some altcoin cases, it was 50%. And so what happens is when price goes back there, those people that saw their 10,000 account at 5,000, they're made whole again. And there's this psychological thing about saying, okay, I'm back to break even. Let me get out. Let me just walk away at this point. And that's why you have the technical resistance right at that level. So to me, this is the level I'm watching right around 21,500. Let's see in the next few days what happens. I actually put out a short signal on Ethereum yesterday when we were above 1550. I think we're in a position to see a pullback here.
Yeah. I've kind of been talking about a little bit of a bounce, mainly because of the inflation print. We knew it was going to come in, softer, not softer than expected, but softer. We knew the markets were going to rally off of that. and then potentially see the reversal because the Fed's going to come out and beat the market down again. But I think, like you said, what's going on is a lot of people bought thinking the bottom was in at that 17,000 level before this most recent drop. And then, they've lost 20, 30%. So they're going to sell as soon as they get back to that 20,000 or break even level. A lot of people that got in there. The other thing is people were shorting at the lower end of this, consolidation here, thinking it was going to just immediately drop. And what I've been saying is the most probable, max pain scenario would be a pop up like we've seen and then roll over from there. And I think, that was just people continuing to short. And what was it, $1 billion worth of liquidations in 24 hours?
Yeah, and you could see that. I mean, it was just incredible the last couple of days, but especially yesterday, how you could see the shorts just where price went up $100 on Bitcoin in a matter of seconds because it was that short covering, just squeezing going on. And again, that's the key is that, if you look at the stock market and you've been around for a long time, Greg, is that, you see these bear market rallies that are they call them rip your face off rallies because they're so intense and they get so much excitement from bulls. But again, if you look at the stock market, we've had moves like that. And in fact, I showed some charts earlier today. I posted one on Twitter, but basically what it was showing is that since Tesla has topped out, it had moves of 35%, 64%, 50%. And then even down here, you're at 18%, where it's, here we are with Bitcoin up, 25, 30% off of the lows. I mean, that kind of falls right in the midst of these moves that we've seen in Tesla. And I do liken Tesla and the type of people that are investing in Tesla as the same that kind of get involved in Bitcoin and kind of have that mentality. So I think it's important. You could look at any stock. I mean, you could look at Apple, Amazon. A lot of them have these bear market rallies where they jump 30, 40, even 50%, but then ultimately find themselves making new lows. And so I would just caution people out there. Yes, yes, it would be great to know that Bitcoin has made a low pivot and maybe we're starting to head up, but I wouldn't get too excited just yet.
Yeah, there's just no conditions, conducive for a market reversal right now. It's just because Bitcoin is on the risk asset level like everything else. And I mean, the Fed is going to tell us when it's bull market on, and the Fed has said the opposite. So you can't believe the Fed, follow the Fed, and bet on the Fed on the way up, and then completely ignore them on the way down. Albeit, I think a lot of the markets and a lot of the institutions out there are still doubting the Fed's resolve. So we're kind of in that cat and mouse game. And, if you go back to Bitcoin, zoom out and look at Bitcoin from the peak, Bitcoin's had, 40, 50% rallies or more since the peak. I mean, back in June, it had a 40-something% rally. Up there at the Do Kwon, I mean, we had some 60% rallies during that buying spree. That was Michael Saylor and Do Kwon there. Yeah, 47%.
Yeah, that was 47% right there. This one was a little bit smaller. It was about 43%.
43, yeah.
Right. So
and then it's been 20s.
Right. And so here you're at, what are we at right now? We're at 35%. So again, you could argue, just like you're saying, is that this is at this point, we don't know if this is anything bigger yet. And to really be kind of on that new bull market will be at all-time highs in 6 months from now is probably a little bit of a jump the gun type scenario.
6 months. What about next week?
Hey, I think I was seeing that on Twitter too.
Yeah. Now, well, let's take a look at Bed Bath & Beyond. Talk about meme stocks. I don't know if you've been watching that. I'm sure you have. Last week. I mean, that was 200%.
Yeah. In fact, what I think is so amazing about this is that you could see these moves that were occurring in stocks were precursors. And what it was telling you was that it was a risk on trade again, which then if you connected the dots, gave us a heads up that if it's risk on in Bed Bath Beyond, GameStop, AMC, all these things were running up ridiculous amounts. Wouldn't it make sense that the crypto market was going to get a squeeze as well? And again, I think that's such a cool thing to kind of connect the dots through different asset classes.
Yeah. I mean, if you zoom in on that a little bit and just look at that, I mean, that's probably what we're going to see on Bitcoin. It's pretty much the same price action, except for, Bitcoin only did a fraction of that. But I thought about it too. When Bed Bath & Beyond was down and when they said bankruptcy, I'm like, man, that could be a nice little trade, but it could go against you pretty quick too.
Yep. Yeah, for sure. I mean, and again, we could flip over to AMC here. I mean, you could see the same sort of pop in AMC. I mean, not as dramatic as Bed Bath Beyond, GameStop, all these stocks. I mean, look at GameStop from this low of $15. It got as high as 20 and one or change. That's a 33%, 40% move right there. So yeah, I mean, you're seeing it across the board. I think partially this is a result of what I call the January effect, right? Where in December, you have lots of pressure from people saying, all right, I made money in crypto early in the year. I booked profits on Doge or this or that. Now I have losses on the rest of my portfolio. Let me sell to kind of not pay taxes or limit my tax liability. And then that's all done coming into January. So you have those sellers kind of going away. And then you also have the fear about FTX and kind of the shorts that we're building there as well, saying, oh, this is going to crush. I mean, I can't tell you how many times I went on interviews in the last 3 weeks and just said, Solana, yeah, I mean, it's absolutely potentially could go to zero, but there's a trade here. And the trade is very simple. It's that, you have an $8 coin that could go to zero. So you're risking $8, put 2% of your portfolio in it, but it could also go up 300%. So it's like a risk reward assessment. And obviously we see here what it ended up doing, but yeah, it's super fun to trade this market.
It is. And this is all. So if you look at Bitcoin, Ethereum, Solana, all the major altcoins, in conjunction with Bitcoin, they have look at that, the exact same price action pretty much. And this is a lot of this is manipulation. I mean, Binance is pretty much the only game in town. All the market makers are working with them. They see your trades. If you're posting shorts, longs, they see your books. So they're just liquidating you and wiping you out. And, when you go to the traditional market, so you don't see that. You don't see identical price action across most or all of the assets. You see this, obviously this little rally we've had recently in certain stocks because of that rotation. But, a lot of this is manipulation. It's liquidity, hunting and stop loss hunting and things like that. And, once you get that momentum going and people start jumping in, it gets fun and it can go. I mean, it's, I've seen Bitcoin go on a tear, man, that just, kind of people just couldn't believe it. But I just don't think there's enough liquidity out there to sustain it. And I just don't think the conditions are right yet. I think what's most probable in my view in traditional markets as well as crypto is, a retracement from here, go back down, test the lows of the previous lows, that 15, 7 or whatever it was on Bitcoin, and, the lows on traditional markets as well. See if that holds. And if it holds, we might be able to put a base in there until we figure out recession. If not, I think, we'll put some new lows in here going into the next couple of months.
Yeah, no, I'm in agreement with you on that. And I think that's my next case for downside in Bitcoin or crypto in general, is the idea that we'll get some regulation out there that actually will help the case for longer term sustainability in crypto. But the next leg down to me is where you start to see the asset markets like the stock market really start to tumble when we do enter recession. And then the biggest question is, right, and I think we talked about this in the past, is when we get to that point, all investing people, all commentators, all investors, they're going to look to the Fed to bail us out, because that's what we've been accustomed to doing for the last 12 years, 13 years. And the Fed's going to say, honestly, can't do that. We can't start printing again. So now you're in a sustained economic recession where asset prices, because the companies will earn less, are going to have to go lower. And that question is how much of that sell pressure in the stock market trickles in to the crypto markets.
Yeah. Let's take a look at the S&P real quick while we got you in NASDAQ maybe.
Yeah, so I've actually started accumulating shorts on the S&P. I wouldn't call myself all in on my positions yet, but I'm in the camp that, I mean, we could go a little bit higher, but I do think that we're in a position here where we're going to see a bigger drop in the S&P. And I think this is, again, the same kind of thing. You're getting this asset kind of re-risking, if you will, people taking risk again, but we're now into some key levels on the S&P where I think you're about to see a bigger rollover and probably still trading down. I think this year at minimum, we hit this 3,400 level. And then I think we could go down to this 3,000 level by late this year in 2023.
Yeah. I definitely think, if nothing, a retest of those lows, and that probably is not going to hold. And I mean, every time we've tagged that trend line, it's put it in a new lower low. And, the VIX is down around 18. I don't know if you trade the VIX or watch that at all. Not trade it, but use it.
Yep.
The VIX is down where every time it gets to that level, we put it in a new low.
Yeah, absolutely. And I think people have to look at the big picture, right? This is where you started to see quantitative easing at the lows in 2009. And this is the run we had. And now essentially the Fed is pulling the punch bowl away. And is it realistic to think that all we're going to see is this 20% correction on the S&P 500? I find that hard to believe. I mean, again, the addiction to easy money, cheap money is now gone. I mean, look at the mortgage market, look at the housing market, everything that's going on there. It's collapsing across the board. And that's only going to get worse once people start to lose jobs. As of now, job market is safe. I think that's keeping things afloat. You throw in a weak jobs number, where we start to see people net losing jobs month after month, and things get very nasty very quickly.
Yeah, it's the great repricing. And yeah, we haven't seen recession. That's the thing. So the consumer is still stubborn. People are still spending, prices are still sticky, and they're not coming down. And the Fed just really hasn't really had an effect on that yet. A little bit here and there, but I mean, people are still spending. I think most people just don't think that we're going to have a recession. The job market is tight. They can't really, there's nothing they can really do with that. That's an anomaly that we've never seen ever in the history of this country or the world right now from a labor perspective. So, I mean, there's a lot of things out there that they just, it's going to take a while for them to get a grip on it and for this repricing and balance to happen. But I don't know if we'll ever really get a balance in the labor market. That's just a very different beast right now than we've ever seen or can even understand.
Yeah, no, it definitely is different than we're used to. But I think the most important thing to keep in mind is that, you know, the average investing age has dropped significantly. You've had so many new young investors coming in the market, partially through crypto, partially through meme stocks and trading that. And again, this all happened during COVID and work from home and money being piling up because people didn't have to go to work and all this stuff. And I think you have to keep in mind that the average investor has not experienced, you know, a long bear market in stocks. And that does concern me because it makes people think that, oh yeah, you know, maybe we'll have a dip, but we'll roar back to all-time highs in 6 months. And ultimately you've been through, you know, 2008, 2009, we've been through the dot-com collapse, and it's not, you know, there's at some point a reckoning period where we're going to really have a reset here.
Especially without the Fed. I mean, we are in an environment where the Fed says we are raising rates. We're not bringing rates down. We're not stopping. We're not pausing. They're going to slow the pace. We might see 25 basis points at the next meeting in February. But until the Fed says we're done, and then when they do, once the Fed pivots, then you bottom after that. You know, that's not necessarily off the races always and forever. Although there is, and, you know, and this is the good side. So everything we've been talking about is risk management, be careful, don't FOMO, because, you know, the bear market, you know, everything the Fed has to do is not done yet. Until you get inflation down below 4%, I don't think the big capital's coming back to the markets at scale until we get inflation down below 4%. And the Fed can say, look, we've reached neutral, we're done. And we saw what happened the last time they said we're at neutral.
Yeah. Yeah. I mean, the only thing I would say also is historically, when the Fed actually does pivot, the markets have actually sold off a lot more. So I think people have to keep that in mind, is that just because the Fed pivots doesn't mean all of a sudden bull market on again. I think initially you're going to get that reaction, right? People have been programmed to say, oh my goodness, this is fantastic news. But if you look at past scenarios where the Fed has pivoted, we've actually seen a significant decline in stock markets.
Yeah. It typically falls, you know, a couple of months afterwards. What's interesting too is, you know, the bottom came in 2009 in March. 2001, I'm not sure what time frame the bottom was then. What do you have on that?
2001. Let's go to the weekly here.
Yeah, I know 2009 because I was in it thick then. So that was March. I remember all that, but I wasn't really in it and active in 2001.
Yeah. So it looks like right here is where, oh, nope. So here's 2001's low. And then in 2002, the S&P made lower lows. But then 2003, and look at this. This is really a cool chart, because what you can see here is there was a bottoming tail, technical bottoming tail, and then we retested it once, twice. And the fact that it couldn't break, that finally was telling you that there were too many buyers down here, and then markets began to go up. But yeah, I mean, you could see that low there and how it kind of triple bottomed there, if you will, and it just couldn't break. And that began that next bull market that took us into 2007.
Yeah. Take a look at NASDAQ from 2001. Let's see what that looks like.
Here we go.
So that's a little different animal there.
Yep. Yeah. So this one again, here was your dot-com bubble high, which was again right underneath 5,000, and then we bottomed out. And this is the part that, you know, for me, when I look at the dot-com rally, it's very similar to what you see in the charts now. And it, you know, being someone who's been through multiple cycles like this and not just zero cycles like so many investors, you have to be a little wary. I mean, to see a market drop from 5,000 down to 700-800 on an index like the NASDAQ, I mean, that's pretty scary.
Yeah. And that looks like most tech stocks right now and most of crypto, including Bitcoin.
That's right. That's right. It does. And there's just, and I think it's so interesting because I think we've seen some of these, like the Zooms and some of these other stocks, they've started to kind of bottom out, or at least it looks like that. But now you've been seeing like Apple rolling over a little bit more, some of the large caps starting to kind of be and to me, that's the final cycle of a downward move, is where you finally catch up to the strongest. The strongest finally get decimated.
Yeah. They're just not done repricing, you know, just like real estate. We still got a little ways to go with real estate, and it's all interest rates. And again, it's the Fed. So the good news and the positive note on all of this is there's going to be a huge opportunity once this is all done and the Fed says, we're out and the market does bottom, and there's going to be plenty of time. It's not now, I'm not going to say it's not and it's definite. We don't know. Nobody knows what the markets are going to do, but it's not very likely or probable that we're going back into a bear market all of a sudden right now, just because we had a bear market rally, just like, it's been saying, with the Fed doing what they're doing. Now, if the Fed came out and said, we're done, there's enough investable capital out there that could support the markets, and, then we could enter a new bull market. But I just don't see it right now with the Fed continuing to hammer at the markets. And they're going to come out next week and they're going to be talking tough after what they've been seeing.
And I think that point is such an important point to make, is that the Fed does not want to see crypto rallying back strong. The Fed does not want to see the stock market up significantly. In fact, I think it was 2 meetings ago where the initial statement from the Fed came out and the markets ripped up. And then Jerome Powell went to his press conference and he just said you could see him almost like looking at the market on his phone and then being like, oh, I don't want to rally. And then he just hammered the markets and then the markets collapsed below that. So just keep that in mind, is that to get inflation under control, you can't have asset prices ripping higher, because the wealth effect takes over and everyone feels wealthier. They'll go spend more money, creating more issues.
Yeah. And again, for the average person watching, they might be, who cares what Powell says? Who cares what Fed says? This is crypto. It's risk assets. The big money that moves the market are watching and listening to the Fed. So when we say that, that's what we're really meaning, is that until the markets believe fully where the Fed is and what they're doing, we can't get off to, bull market and new all-time highs. And that's just the reality of the market. It's unfortunate, but it's controlled basically, by the Fed and what they're doing. It's all about liquidity.
It is. That's what it's all about. How much money is in the system.
Awesome. Well, Gareth, I appreciate you taking time out today, man. This was awesome. I'll get this out there and we'll see you on the next one.
Awesome, Greg. Have a great one. Take care.
You too.